Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 21st of January 2022. We're in episode 2155. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, market seems to be stabilizing once again after having dropped a dramatic 125 points in the S&P yesterday. We still have mild risk off, risk exposure, risk posture. Per this convergent trading pre-market summary sheet, you could see the Eurozone took a pummeling this morning. The DAX down 358 points, stabilizing now. The S&P off 48 basis points. The Nasdaq down 83 basis points. And we're seeing Bitcoin and Ether coming way off. If you recall, the number I had posted about several times with regards to Bitcoin in that plan that we would likely pull back to 52, drop through, and push to 36. We're very close to that. So this thing is not finding any legs. 33, I think, is the high volume node in the zone. With Bitcoin, this is using the Coinbase volume and pricing. The earnings proceed. Netflix took a bit of a beating yesterday. Earnings have not been stellar as expected. Guidance is not pushing to the upside anymore. We're not coming in and finding that they're suggesting that the stock will do better in the future. That's kind of coming to an end. Everybody's talking about margin squeezes or lower profit margins as they absorb certain pressures from the supply chain, inflation, and so on. So that's where we are. Earnings haven't helped the situation here. U.S. Fed meeting on Wednesday next week. There's a ton going on next week that the market is likely to respond to, and so we just I think folks are going to try to get through today. Coming into the weekend, the expectation is we're likely to take a bounce from here. Is what I'm anticipating for today. This is I don't use like RSIs or CCIs or anything like that to figure out overbought, oversold. I just don't believe in that concept. But this statistically has gone quite far, quite fast, and it's likely to see a relief rally today. So we'll see what happens today. Today we have consumer confidence flash at 10 a.m. Eastern. We did have retail sales out of Great Britain this morning, and they just were very terrible. They came in at negative 3.7%, was expected at negative 0.6. But again, we have consumer confidence at 10 o'clock, expecting negative 9. Leading index, which the Fed pays some attention to, we're expecting that at 10. Also expecting 0.8. Treasury Secretary Yellen is expected to speak at 11:30 Eastern, and that wraps up the day into the weekend. So that's where we stand. The S&P this morning. Switch my chart. The S&P this morning has 403,000 contracts traded. Very heavy, relatively heavy. For this time of day, the volume is almost 3 times what we've been getting under normal circumstances. The mode of volume over the last 252 days, which is 1 year of trading sessions, is 228, and it far exceeds that. The overnight inventory is 97% short, meaning 97% of the volume. 97% of the volume is below the settlement price from yesterday, and the range is quite wide. The range is expected to be around 22 to 24 points overnight. It is at 48 points. The point of control 44.55 right here. And so that's where that is. Yesterday, the expectation was a pullback and a push higher into and towards 75 and 90. 90 actually became the top, the high, and then I wasn't there for it, but it rolled over and pushed 125 points down from there. And so that was a quite an impulsive move. The market has definitely been giving up some seriously important support areas. Been doing so quite easily. So it looks like even if we bounce, it looks like the buyers are likely to have a hard time pushing things from here back into 4,700 without the benefit of better news and a little bit of time. So I'm not looking for a V bottom here like we normally get. This may be here to stay for a little bit, which means the volatility will continue to spike. The CBOE VIX is above 25, which is nice to see. Just remember, with higher volatility, there's higher opportunity for gain, but also higher opportunity for risk or loss. And so we need to adjust our size. So it's best if you're trading futures to trade the micros and maybe drop one or two contracts if you're trading multiple contracts. In our review segment, I can't really show you yesterday. It's just a look at this thing. It's just really, really, we did get the pullback. We did get the 75 right here. We did push the 90 right here. And then just from there, it pushed through the mid, pulled back to the mid several times, created this really nice zipper actually. What would have been nice is this little pullback right here at 59. Would have been nice for it to pull back just a little bit more to give us a better risk reward on using the zipper for risk control. And then from there, we went neutral on the day. We broke the IB low, and then it's just basically a trend type of trade. From there, it's breakdown, consolidation, all the way into the close. We closed at an extreme, so you can see just like the prior day, the prior settle is right at the bottom of the session, which means that we are very likely to continue lower. We basically did not find buyers at this point by the end of the session, so the expectation is we would continue to drift in that direction. Nervous hands are likely to sell. The delta was just negative all the way through, and we pushed through some key volume profiling areas. This big high volume node right here was expected to provide some stability down at the 45.10, and it just did not do anything for this market. So this is saying that a higher time frame is in play, bigger players are in play, and it's just running the distance. So with that being said, it does seem overdone to me. Let's take a look. So this was yesterday here. And then we just gave it up. This is an impulse down. I'm expecting this low to be taken just because the auction is showing that it's probably not complete. Multi-distribution profile, which looks multi-distribution when you expand the scale, but it's really balanced. We are right now below the overnight point of control. We're below VWAP and mid. The overnight point of control, VWAP, mid on top of each other, further making an argument for balance. So on the Convergent Trading pre-market summary sheet, it probably should have said balance given this movement here. But overall, this to me looks like a consolidation that is breaking lower, and I'm expecting it to push down into what is a key point of control from way back. This is 2175 right here. This area here is expected to be tested, consolidate, maybe even get down into 4,400, but I'm expecting this thing to push back a little bit higher today. Sure, it might get a lower high, lower low, but I'm expecting it to stabilize, and I'm expecting the shorts to cover a little bit into the weekend. Okay, so let's take a moment and look at our composite. Um, Let me just um, what is the? Oh, that's funny. So if we look at our composite, we can see that all of that weak structure I talked about at the end of last year, that rally that was really um, that rally, which was really built on poor structure, pretty much uh, uh, being fixed here. You can see that we don't have gaps. You see on the way down, we don't have any gaps. We check the prior auction and then move away. We check the prior auction and move away. This is how a solid down structure looks like, or a solid structure entirely looks like. And this is feeding into the expectation that this is here to stay. This leg is here to stay for a while. This is a pretty significant uh, pullback here, and it's still, overall we just broke the monthly one-time framing. We basically just broke last month's low, which was at 44.85 and a quarter. So the monthly, weekly, and daily time framing is now broken, and the daily and the weekly are one time framing down. The monthly is neutral. To me, this is really an indication that things are changing structurally, and it's likely to remain that way for a little bit of time, which makes sense with this nervousness relating to inflation, the cost of energy now, things like that. Crude being at $85. To me, this is not likely to find a V bottom and push back up like we've seen in the past, where it just rallies and rallies and rallies and rallies. This looks to me like it's likely to bounce. Like I said, I'm expecting a bounce into the prior day's range. This morning, I'm looking forward to push back over yesterday's low, but I'm looking forward to just consolidate here, still give us a lower high, lower low. Not expecting yesterday's high to be taken at 94. And so I'm favoring the short side and will continue to do so. I will play the long side, but on a shorter time frame. I'm expecting the longs to be pretty aggressive this morning, but I don't expect them to go very far, which is what we saw yesterday. Okay, so we've broken the 100. We've broken through this significant former all-time high. We have moved from this balance structure up here into this balance structure up here. The point of control for this balance structure is 44, 44, 21, 75, which is within earshot here. We're trading at 44, 45 even currently. So I'm looking for this to continue lower. This has not successfully found buyers yet. So the structured trades will be looking to the short side. Okay, so that's that. I want to remind everyone that if you didn't attend yesterday's webcast with Jared Tendler, I would strongly suggest that you go to ct.pro/winning-trader-mindset and take a listen. He shares a lot of what I think is important information in there. Some good pointers on how to detect the triggers that lead to poor behavior, poor decision making. We talk about the the use of probabilities in professional trading and things like that. I highly recommend you listen. Take a listen to it, and there's also a special offer from Convergent Trading for the remaining of the month of January, or till the end of the month of January, and then after that it expires. Take a look at this recording. Go to ct.pro/winning-trader-mindset. Here's what's expected for today. It's nice that the software didn't crash today, huh? So here we are again, balance. Remember, I'm not a swing trader. I'm not looking to do long-term analysis or predict where the turns are. I'm simply responding to what the market's showing. And what it's showing here is that we're trading right below the overnight point of control mid and VWAP. I'm looking for this thing to immediately push higher. I'm looking for a counter move response like we saw yesterday, but I'm also looking for that to falter somewhere around the prior settle potentially. Maybe it'll take out the overnight high at 44, 77, 75, but I'm also looking for it to complete this move by moving lower, and then later in the session I'm expecting it to push to 45.17 or so, 45.17, 45.20. So I'm looking for the 20.17 up here. That'll be the first scenario. Okay, both sides in play. I'm simply going to sit on my hands on the open here today. By the way, just let's see who decides to come in and push. The secondary scenario is an open auction that does the same thing as yesterday, same thing as scenario one, pulls back down into the overnight point of control, pushes the overnight low, and really cannot find, continues to very persistently liquidate equities all the way down into the MC point of control from August at 85. So this gives us our day range stat before we bounce into the close. So this is expected to push through the double O and to get down into 85 down here before the bounce. This is scenario two. Okay, we're opening out of range. We're opening in a gap. I'm expecting it to respond after such a big drop. I'm really expecting responsive buying back up. This is opening in a gap after a big drop. The third scenario, there is a third scenario. The third scenario today is responsive buying. Is the responsive buying scenario. Prices have dropped enough for value players to see an opportunity to allocate more funds. So it drops, and then we get an impulse higher, but there's no turn. Squeezes up here against the last month's low at 44.85, and now it starts to push all the way back to 45.21 or so, and then starts to come back into where this move started to take place. We have single prints at 45.35, and the target would be 35 on scenario 3. So we're coming back to where the move was initiated from, right up here. So we're coming back into the balance of the prior the session 2 days ago, Wednesday and Thursday, which yesterday looked like a balancing session. It looks like it was pretty much done until later when sellers came in and couldn't find buyers anymore. So the third scenario is really bringing us back into this balance, and we start to reestablish balance for now. In other words, the market is finding value in that 45.72 area, which was the prior week's low, which is a high volume node, and so on and so forth. So we're back into the 75 area right back here, where the last 2 days have indicated there's balance there. There's some acceptance of what's going on up here. So scenario 3 is an aggressive, responsive buying move into that area. Good luck today, and keep it tight, right? We don't want to go into the weekend with a blow up on our hands. So just keep it tight. Make sure you understand the reason behind your trades. If you have not seen the thread that I pinned to my profile on Twitter, let me pull that up for you. twitter.com/futurestrader71. Here. If you look at this pinned, it's right at the top. So as soon as you go to the Twitter feed, you don't need a Twitter account to be able to see this. See, I'm not logged in and I can see it. If you go down here and click on this, I suggest you read this because it's really important to you formulating a good thesis and then trading it from strength. Okay. Good luck, and I'll catch you on Monday morning. Take care.